off against your output liability. That means you are not supposed to pass this separate entry at all. You need to include it in the value of goods or services. You are not eligible to utilize that credit. That is called as block credit. Okay, highly important from the new scheme perspective as well as from old scheme also. In old scheme, you need to remember what is mentioned in the section. For the new scheme, you will get the question on comprehensive question on this input tax credit. Calculate ITC available they give. They include the eligible ITC also, and they include ineligible ITC also. This is called as ineligible or block credit. ITC also, you need to calculate what is the ITC available or available to be set off or eligible ITC. They will ask the question. 10 marks question. They give around 8 to 10 transaction. You need to identify which is eligible, which is ineligible. Okay. Comparatively easy to remember. There is no as such difficulty in this. 17.5 it states the block credit. This one, block credit. Okay, this section you need to remember, section 17.5. Okay, see, notwithstanding anything contained in subsection 1 of section 16, that means eligibility, it overrides this section. 16.1 section and 18.1 section, this section overrides those two sections. Okay. Input tax credit shall not be available in respect of the following. Shall not be available means it is not going to be available to set off against your outward liability or output liability. What are those? First one, motor vehicles and other conveyances and related services. Understand here? Motor vehicles. That means any business person may purchase the motor vehicle on which he pays the GST. Okay, that GST is not going to be allowed to set off against your outward liability. What are those motor vehicles which are ineligible? Okay, if a company or business person purchases any motor vehicle whose seating capacity is less than 13. How much? Less than 13, including driver. Those motor vehicles on which GST paid is not available to be set off, or you can say it ineligible, or you can say it has blocked. Credit has been blocked for that. How much seating capacity? Less than 13, including driver. That means 13 or less. Normally you see why they have devised this kind of blocking. The company will purchase the luxurious cars for the use of directors. Normally managers and directors, they purchase the car or motor vehicle, luxurious one, in the name of the company, and it will be given to the directors. Instead of giving the salary, higher salary, because it becomes taxable, Hence, they route the salary income in this way, purchasing the luxurious car, giving them for their use. And company will enjoy the tax. It will be registered in the name of the company. They will enjoy the tax set off, but vehicle will be used by the executives for their personal use. To curb these kind of practices, the law or the council have decided to block whatever the ITC paid on those cars or the motor vehicles which has the seating capacity of less than 13. That means normally cars and the luxurious motor vehicles will be having seating capacity including driver 8, 7 plus 1. Okay, for them it is blocked. Normally company will not buy the bus and give it to the directors to use. Right? Only the cars and cars in the sense the higher end cars, foreign cars they will buy. To avoid such practices, they bought in this provision. Okay. Next. When any other incidental expenses incurred with respect to those motor vehicles for which there is a block, on those incidental expenditures, if you have paid the GST, for that GST also you are ineligible to take credit. Example, when you purchase a car or motor vehicle, you purchase the insurance also. On that insurance there is a GST. That GST you cannot claim it as ITC. Okay, like that, if you do the services, on the service bill there is a GST component is also there. That GST is also ineligible to be set off. Like this, they impose the restriction of the motor vehicles having the seating capacity of less than 13. The same kind of vehicles, even though the seating capacity is less than 13, if it is used to give the training institute, if they uses that, then for them the credit is available even though it is less than 13. First one. Second one, if the motor vehicles have been purchased by the dealer to sell the same, for them the ITC is available. Third one, motor vehicles purchased by the person who uses them to transportation business of the passengers, for them ITC is available. To whom it all available? Those who are engaged in the imparting training, those who are engaged in the transportation of passengers, and to those associates or persons who uses them for further sale. For these three categories, There is no blocking. There is no blocking. That means they can use that credit while making the outward tax or output tax. They can set off.
Sir, what is meant by this further supply of such motor vehicles? The first item, A.
The car will be purchased by the dealer from the company and car will be sold to the customers. Dealer, Maruti Suzuki, Audi, Hyundai, where will you purchase?
Showrooms, yeah.
Will you purchase from the company itself or from the dealer?
Dealer.
Dealer would have purchased from the company, right?
Yeah.
That is.
Okay.
Okay. The same thing, vessels and aircraft. For vessels and aircraft, ITC paid is not eligible. That means it has been blocked. To whom and all it is available? The same thing. To whom? Training institutes, further supply and transportation of passengers and transportation of goods. For both it is applicable. Transportation of goods, the motor vehicle, even though it is less than 13, it is applicable. Aircraft and vessels, transportation of passenger goods, it is applicable. And those three only, it is also applicable. It is also applicable. Passenger transport, importing training, further supply. Understood? Whatever is restricted in case of motor vehicles, the same restriction is applicable to aircraft and vessels also. Okay. Second one. The following supply of goods or services are both. Services of general is the same thing I told now, repairs, servicing, insurance, those things they are mentioned here. I already discussed this one with respect to motor vehicles and aircrafts. Next, the following supply of goods or services are both. Food and beverages, outdoor catering, healthcare services and other services. Assume you are running a business. You order food and beverages once in a week to your employees, on which GST is charged. You are not eligible to get the credit of that GST. Okay, this is the generic one. Specific one. If law abides you to provide food to the employees, then on which you pay GST, it is applicable. Okay, you are eligible to take the credit of that. Understood? Likewise, outdoor catering is also same way. Health services. If you give health services to your employees, it is not required by the law. You are ineligible to take the credit of the whatever the GST you have paid on that health service bill. If law mandates you to take the insurance or any other health services to be provided to the employees, in that case, GST paid on them is eligible to be set off. Understanding, no? Okay, that is what they are mentioned in clause B. Other services comes to beauty treatment. Beauty treatment, if it is for the sake of beautification, on that if you means the company pays the bill which includes the tax, I mean GST, that GST is blocked. If the same kind of treatment happens to restore the anatomy, plastic surgery, just to restore the normal kind of physique on which you pay the bill along with GST, on that you are eligible to take the credit. To restore the anatomy, it is available. For the beautification, it is not allowed. Likewise, gym services, membership of the health club facilities for which the company pays the bill which includes the GST, on that credit is blocked. Next, if you pay to any employees on the travel to their home or on leave travel, if you pay the bill of the travel along with the stay which includes the GST also, that is not eligible. I mean to say it is blocked. All these things, please remember, they may give the case studies whether it is eligible or not, like that. This membership and all, it is not eligible. Whereas health services, if it is mandated by the law to take the insurance, on that insurance premium if you pay GST, that GST is eligible. For the beautification, unless it is restore the anatomy, it is not available. To restore the anatomy, in accident something has happened, no, they do the plastic surgery, for that it is eligible. Just for the beautification, if you do the plastic surgery and all on which GST paid, it is ineligible. Okay, there is a clear differences are there. You need to understand in the question. Works contract services for construction of immovable property. Works contract on which if you pay the GST, it is ineligible. Okay, self-construction, work construction of immovable property on which GST is not available. You will get the question on this relating to this works contract. They are given, see, other than plant and machinery. Okay, have you guys seen any manufacturing unit? Have you gone to any manufacturing facilities, production department where the actual manufacture happens? Have you guys seen? They have a huge, big machineries, right? Yes or no? Huge machineries.
Yes, sir.
Okay. For the installation, they dig the land, they construct the platform on which the machinery will be installed. For that construction of construction, this one, it is an immovable property. Construction of the platform, it is an immovable, but you are doing it for the purpose of installation of plant and machinery. In that case, that construction on which you uses the cement, jelly, sand, engineer, laborer, all these things, the amount comes to 10 lakhs, assume the platform cost, on which 18%, assume the GST 18%, 1,80,000 GST you have paid, that will be eligible. If you construct your office, that is 2 crores, on which 18%, 36 lakhs. On that 36 lakhs, you are not eligible to claim ITC. But for this platform, for the installation of plant and machinery, you are eligible to claim ITC. You are getting the difference, what I meant? If it is related to plant and machinery, any civil structures you build on which you pay GST, that GST is eligible. If you construct the office building or finance office, finance department, construction of building for the purpose of HR, marketing, everything, on which you pay the GST, it is not eligible. That is ineligible or blocked. Understood? These two are same. Okay. Next, goods or services are both on which tax has been paid under section 10, composition scheme. I told you when it comes to ITC, I will tell, when you are a composition dealer, you are not eligible to take ITC on the goods or services on which you paid the GST. That day also I told. Goods or services are both received by a non-resident taxable person except on goods imported by him. NRTP, we say non-resident taxable person. If any non-resident comes to India to effect the sale, if he brings or imports the goods on which IGST is applicable, that on that goods he can take the credit. But if he purchases the goods locally means in India, on which he pays the GST, on that GST he is not eligible to take credit. Goods or services are both used for personal consumption. That means if you are using it for your personal use, on which you have paid the GST, you are anyhow not eligible because you are not doing any business, not eligible. This one is important. H. Goods lost, stolen, destroyed, written off or disposed of by way of gift or free samples, on which you pay GST while purchasing the goods. That GST is ineligible when you give it as free sample or as gift, or the goods has been stolen or lost, or it has been destroyed by fire. It is not eligible, or it is blocked. Understood, guys? This is all about section 17(5) block credit, and one final one. No credit of any tax paid in accordance with the provisions of section 74, 129 and 130. That means if you evade any tax, on scrutiny or on audit or on any other by reason of any by way of any other reason, if the department comes to know that you have made misrepresentation or falsification or evaded the tax, they issue the notice to you. On that, you pay tax of the GST. For that, you have purchased the goods and you made the sale of the goods. On sale, you have not paid the GST. That means you suppress the sales. But you have utilized the credit of the goods purchased. If the department comes to know that you have evaded the tax, in that case, whatever the GST you have utilized by reason of suppression of supply, on which GST you have taken, it has to be reversed. You are not eligible. Example, pharmaceutical representatives, medical representatives will come and make doctors know. They will give samples of the tablets so that they can prescribe the same kind of tablets to the patients. On that samples, whatever given by the medical company to the doctors via representative, on those samples for which the company would have used the input preparing the tablets, medicines, on that inputs, pharmaceutical companies are not eligible to take credit. Okay, this is all about next. Is it heavy? In section 16 visa eligibility, section 817 visa the blocking, section 18 defines there are special cases. How to take the credit in those special cases? Okay, there are four situations. C, D, C, B, A, B, C, D, four situations are there. Okay. If I go by this, I don't think you guys can understand. Hence, I have prepared one table kind of a thing. This one. Okay, see. First case, new registration. New registration means I need to touch few points on the registration now so that you guys can understand it in a better way. New registration in the sense you started the business during any day during the previous year. In this previous year 22-23 you start the business. Okay, until you achieve certain threshold you are not supposed to get or you are not expected to get registration. That is the rules. That means I will just take the Karnataka state as an example so that the other things when I go to registration chapter, I will explain. Till that time, please under respect to Karnataka as of now. Karnataka falls under the other states. Okay. In that case, if you are dealing in the goods, until your turnover is crosses 40 lakhs, you are not supposed to take registration. And in case of service, if you are providing the service, until your turnover crosses 20 lakhs, you are not supposed to get registered. That is the provision. Okay. Now, you have started the business during the month of May 2022. Not 22, we will take it as 23 May. Okay. That means when you have started the business on May, has your turnover has crossed on that day 20 lakhs or 40 lakhs when you have started? When you have started your business, has your turnover has crossed on the day when you started 20 crores or 20 lakhs or 40 lakhs?
No.
No, obviously, because you are starting from that day only. Okay. Assume that over a period of time, you do the business, and in the month of November, it touches or crosses the threshold limit of 40 lakhs or 20 lakhs, as the case may be with respect to goods or services. Okay. I think I have given the example also. See. You have started the business in the financial year 22-23. In that financial year, you did not cross. Sorry, 23-24. Okay, in the financial year 23-24, for the financial year, you started the business in the month of May. May 23, you started the business. Okay. On 2nd November, your turnover crosses the threshold limit. Crosses the threshold limit means 40 lakhs or 20 lakhs. Only I am talking with respect to Karnataka. There is a 10 lakh also. I will not touch that. Okay. Your turnover crosses 40 lakhs or 20 lakhs, as the case may be, on November 2nd. Okay. If you get registered or apply for the registration within 30 days from this date, from 2nd November, 30 days. What is the date? 2nd November. 30 days means when? 2nd November means including 2nd November or excluding 2nd November within 30 days. 3rd November, that means 28 days in November. 2nd December 23. If you apply for the registration on or before 2nd December 23, okay, in that case, whatever the input available or left on 2nd November 23. On that, whatever the ITC you would have paid, you are eligible to take credit of that ITC from 2nd November itself. Understanding or not understanding? Please tell me. Be honest, because it is not that easy.
Didn't understand, sir.
Did not understand. Okay. See, you started the business on 1st May 2023. And when you are starting the business, the previous year or previous to the business start of the business, your turnover will be zero. Okay, you are not required to get registered until there is a threshold limit of 20 lakhs or 40 lakhs. Only with respect to Karnataka I am talking now. You are not required to get registered. You doing the business during the month of November, that is on the 2nd November, your turnover crossed or achieved 40 lakhs. Assume that you are dealing in goods, your turnover crossed 40 lakhs. Now, the registration becomes compulsory. If you apply for registration within 30 days from this date, that means from 3rd November, within 30 days, if you apply for the registration, within 30 days from this date, then whatever the input contained on 2nd November, on which you would have paid the GST, no? You would have purchased the goods here, everywhere you have purchased the goods on which you are paid the GST also, right? Since you were not registered, you are not eligible to take credit of the GST paid on the purchases, whatever you have done on these periods. Only the registered person can take ITC. Unregistered, no. We have seen in the block credit also. Okay, unregistered person cannot take credit. Now, you happen to take registration. It becomes mandatory now. You apply for the registration. If you apply for the registration within 30 days from 2nd November, then on this date, on 2nd November morning, whatever the input in the sense, input of raw material, input of WIP, work in progress, input of finished goods. That means raw material means whatever you have purchased the raw material on which if you have paid the GST, that GST amount, you have used the material and the material still in process, not yet completed. We call it as WIP. On that, whatever the tax contained on the input, you have used this raw material in the finished work in progress. No, on that work in progress, there are some materials will be there. On that material, whatever the GST you would have paid, or that GST, it has been completed your goods, but it has not been delivered or sold to the customers. On that finished goods also, there is a material component involved, right? Yes or no? On that material amount, you would have paid GST. All these three GST amount, you can claim ITC on the 2nd November, provided if you have applied for the registration within 30 days. Assume you will not apply within 30 days. You apply after 30 days. That means on 32nd day you apply. Then the date on which you are eligible to take credit will be date on which you get the registration granted. On that day, whatever the input you have on that GST, whatever you have paid, that is eligible to take credit on this date. Assume that the registration has been granted on 10th Jan 24. You apply the registration after this date 30 days. And if you grant the registration on 10th Jan, on the 10th Jan, whatever the input you have, input in the sense always these three are input. Input of stock. Input of stock, sorry, stock of material you call it as. Input means material, stock of materials. Stock of materials could be raw material, work in progress, finished goods. Whatever you have on this date on which you are eligible to take credit. When you do not apply for the registration on or before 30th day, 30 days from the date of achieving the turnover of the threshold limit. Understood?
Yes, sir.
Okay.
Sir, on clarification,
Yes.
let us assume it has started in May 22. That year it didn't achieve 40 lakhs.
Yes.
But next year, November 23, it achieved 40 lakhs.
Yes.
So in that case, from 1/4/23, they should take the credit for the early.
No. When they achieve,
Oh,
see, threshold limit has to be seen for the year.
exactly.
In the previous year, you did not achieve.
Yes.
In the current year, you achieve.
Yeah.
When you achieve, from that day, you have to take the count 30 days. Within 30 days, if you do not apply, I am telling, grant may come anytime. You should have applied. That means you should have intimated the department stating that I have achieved the threshold limit turnover. Hence, I wish to get GST number. Now it has become online. Within 10-15 days, they get the number also. Earlier, it used to take so many days. Okay.
Okay. Whatever is the stock that is available on that, whatever is available.
If it is applied within 30 days,
Yeah.
whatever the stock available on the day on which you crosses the threshold limit, on that day's stock on which you have paid the GST, those GST you can take credit. If you do not apply within 30 days on achieving the threshold limit, then on the date of grant of registration, that day, whatever the stock on which you have paid the GST is available to credit. Now you guys may be curious what difference it makes if I take credit here, if I take credit here. Huge difference.
Because you will be losing the 2 days, no? Almost 1 month or 2 months.
Leave the days and all.
Hmm.
From here to 10th Jan, you would have made this sale also. Assume that 50 lakh sales you made from 2nd November to 10th Jan, on which 18% is your GST. 2 crores into 18%, 36 lakhs. 36 lakh GST you have to pay. You are taking the GST on the input on this date. You would have made the purchases from 1st May to 10th Jan. There is so much of purchases you would have made in this period also, on which you would have paid the GST also. Or those GST is also not eligible to be set off. Not eligible to be set off. That means 38 lakhs, not only you are paying out of your pocket without setting off, and without setting off in the sense you are not supposed to collect also. Why? Until and unless you are registered, you are not supposed to collect GST. That means you are paying out of your pocket 36 lakhs. On top of that, whatever the input on which you have paid the GST is also not eligible to be set off. That means you are paying double tax. Understood? I given the example. Okay. Now there is a restriction. What restriction? In all these cases. In all these cases, okay. If any input means goods, especially input means goods, on which you have purchased the input, on which you have paid the GST, only with respect to these special cases. Okay, that GST amount you can take credit. You can take credit for a period of maximum 1 year. Assume that you have purchased the goods in 23 January 23. January 24, maximum date, maximum. 2nd January you have purchased the goods. 2nd January 24 you should take the credit. If you do not take the credit within 2nd January 24, that credit lapses. You are not eligible to claim that. That means previous 1 year, whatever the goods you have purchased, for that you can take the credit. When I say eligibility, those 4 conditions should satisfy. There must be a proper document, payment has been made, goods have been received, tax has been paid. All those 4 conditions applicable to this. When there is a eligibility comes into picture, please remember, you get the questions on these things. Why? There is little challenging. These are all very challenging. First they give 4 or 5 they give. Like they started the business, some date they give. They achieved the turnover, they give the date. When they apply for the registration, they give the date. First you need to see whether the registration has been applied within 30 days. If yes, then the second question comes, whether all the conditions for claiming GST has been fulfilled. What are those? Goods has been received, tick, yes. Invoice is there, document, if yes, tick. Payment has been made, yes, tick. He has paid the tax, if yes, tick. No other information will be given, only with respect to 2 they will give. The other 2 will be presumed to be satisfied. What are the 2? One is invoice date. Only one they give. They will not, 2 maybe give. One is invoice. Date of invoice. You should see from this date when they achieve the turnover. From this date, 1 year before, whatever the date falls, only up to that, whatever the invoice you have purchased, whatever the goods you have purchased from that 1 year period, only those goods on which you have paid the GST is eligible to be taken as credit. Not understood? Let me explain. See, I will take this 2nd November 23, you achieved the threshold. Okay. 2nd November 23 to 1 year, what is the date? 1st November 22 or 3rd November 22? November 22. goods purchased prior to 3rd November, assume 6th June 22, 19th August 22. I will take these two. Whatever the goods you purchase prior to this date, 3rd November 22, prior to this date, on which whatever the GST you have paid, which these goods, if happens to be in stock on this date, you are not eligible to take credit of the GST paid on these goods. Understood? Yes or no? Maximum 1 year prior to your achieving the turnover. Whatever the goods you have purchased still remains in stock. Only on those goods you are eligible to take credit. Okay? Here.
But in the normal circumstances, it is not applicable, or how is it, sir? This 1 year period.
1 year in that what we saw, 30th November or filing of the actual date of filing of the annual return, whichever is earlier. In the normal one, I saw no.
Yeah. Okay.
In this case, 1 year. Both are confusing. Don't apply that one to this one to that. Both are different.
Why they make it so complicated?
Why is because we human beings make these so much complications, no, for the government. At least in south side, most of them are very honest. They pay tax. Track all these things. This is the way. On whom the responsibility is there? On chartered accountants. And you know, most of the chartered accountants have been caught by doing all these malpractices. No, we have to be honest to the client also, honest to the government also. When you guys become company secretary, when the company says just to pass the resolution date post-dated, will you pass it or not? It's the documents, no, you can create anytime. When it comes to uploading the same within certain period of time, if you do not do that one, uploading, even if you have done the post-dated ones, you will get caught. Right? Because we are the representatives of the government as well as to the serving to the clients. That's the reason why we have so much scope and name for our professions. Okay guys, this is the first one. When there is a new registration, if you apply within 30 days, you can take the credit of the inputs on the day when you achieve the threshold limit of registration. If you do not apply within 30 days, then the GST will be, the ITC will be available on the day when the registration is granted. Please remember these two words. Okay. What is the time limit? Time limit is within 1 year from the date of invoice. Whatever the goods which has contained on the previous day of achieving the turnover or on the date of grant of grant of registration in both the cases. Both the cases. 1 year from the date of invoice. Within that, you have to take the credit. Prior to 1 year, you are not supposed to take the credit. Understood? In case of voluntary registration means you are starting the business today. Today only you upload the, you apply for the registration. Today only you starting the business. Today only you apply for the registration. In that case, the day when the registration is granted, that day, whatever the input you have on which you have paid the tax, you can take the credit of that. As good as applying the registration after 30 days. Both one and the same provision. The day when the registration is granted, that day's input, previous day to date of grant of registration, whatever is there on that input, you can take the credit. In case of voluntary, as well as if you apply for the registration after 30 days. Okay, this is the second condition. I mean second situation. Third situation, you are doing the exempted supply. You are doing the exempted supply. Government makes that supply as taxable. That means you are doing, example, you are doing one agricultural product which was exempted earlier. Now government made that product taxable. Okay, when the supply becomes taxable, that day, I mean assume 10th September 23, your supply becomes taxable from 10th September, from today. Whatever the stock you had on 9th September night, that means on the 10th September morning, we don't say 10th September morning, previous day. We tell always previous day, we mention. Previous day, whatever the stock you had on that, whatever the GST you have paid, that GST you can take credit.